China and the US are in the midst of an increasingly bitter trade war, and neither side is backing down. The countries are the world's two biggest trading partners, but US President Donald Trump said that trade is massively lopsided. Take 2017, for example. The US imported $505 billion worth of goods from China, while China imported $130 billion worth of goods from the US. That resulted in a $375 billion trade deficit for the US. On top of that, Trump accuses China of stealing US technology. Beijing requires foreign companies to share their intellectual property in exchange for access to the Chinese market. Trump's weapon of choice for this trade showdown? Tariffs that make importing goods into the US a lot more expensive for the Chinese. It started with things like solar panels and washing machines, and then steel and aluminum products. Now, aircraft parts, TVs, medical devices, and even luxury delicacies such as caviar have been added to the ever-growing list of Chinese goods that face a 25% import tax. But China isn't just sitting back and taking it, it has retaliated with its own tariffs. American producers wanting to export to China now have to pay 25% duties on a variety of things, ranging from soybeans and meats to off-road vehicles. Duties have also been increased on U.S. cherries, grapes, and apples. The U.S. has either imposed or threatened tariffs on $506 billion worth of Chinese goods, while China has implemented or threatened levies on $130 billion worth of American products. So how does this affect people? Well, the tariffs mean that producers have to pay more, and that translates to higher prices for consumers. But it's not just Chinese and American consumers who are being affected. The dispute between the world's two biggest economies is disrupting global supply chains, and stock markets around the world have seen dips as a result of Beijing and Washington's tit-for-tat tariffs. Many economists say this only shows that, in trade wars, there are no winners.